Some more perspective on the general mood of the markets right now. Kicking us off this hour is Liz Miller. She's president of Summit Place Financial Advisors. Liz, great to see you. How would you characterize what's going on in the markets? Because I also mentioned the fact that the S&P had a big Friday and it's been trending higher for a while here.
Right, it has, but I think markets are just in search of a catalyst. We're getting to the later part of the earnings cycle. It wasn't as dour as expected. Certainly estimates were low, expectations were not high, but everyone knew this would be the first quarter where we started seeing these difficult comparisons from last year. And we were really focused on what management was saying. And as I said, it wasn't as dour as some feared. So right now, it's all a focus on what's going to be the next Fed move and when.
And we've got some inflation data this week. What are you going to be watching for?
We're really right now watching that employment number and trying to kind of peel back the onion in a lot of ways. It's interesting. If you think historically, our Federal Reserve keeps talking about, fighting the fight from the last time we had high inflation. But that was in an era of a very weak economy. This time we have very strong employment coming out of the pandemic, and that should be good for our economy. But we're struggling to decide, what does that mean for inflation?
And just in terms of the regional bank uncertainty, we referenced what's happening with PacWest this morning. That's certainly one of those wild cards. I'm not sure if that is the catalyst that you're speaking of to be watching for, but certainly investors have been navigating through that. Do you think we're through the worst of the banking uncertainty, or does this environment just leave a lot up in the air?
Yeah, I keep thinking we're through the worst of it, and then we get some insight elsewhere. Unfortunately, it becomes a bit of a self-fulfilling issue. As soon as it hits the news that we have a regional bank that may at all have a whisper of an issue, then you have depositors jumping on it and making changes. So it's a real struggle for the banks, and I feel for them because Warren Buffett shared with us that there was just mismanagement and bad decisions, and certainly bad portfolio management. But unlike 2008, which we keep thinking about in terms of banking crisis, this isn't really a credit crisis. This is balance sheets that primarily own U.S. Treasuries that are quite safe. It's just that because of higher rates, their balance sheets have really taken a hit. So when depositors do start making moves, they're struggling to meet their requirements for reserves and to meet liquidity needs. So it's definitely a liquidity crisis. And I hope we're getting to a point of increasing stability.
Buffett, of course, is someone who has said famously, be greedy when others are fearful. I'm not sure that means stepping into all the regional banks that are full of uncertainty right now. But with a flavor of financials, there's actually a couple of names you brought to the table this morning. One is State Street and another is Visa, which for some people might be a financial services company. For other people, it might be a technology company. Maybe it's a little bit of both. Can you walk us through just some of the ways you're thinking about the markets right now and how a State Street or Visa might fit into that story?
Sure, both of them a little bit contrarian to the financial sector, but we're certainly looking at the economy as one that is probably at or near its bottom. We may see continued slowdown this year, but as investors, we're really focusing on what are the opportunities late this year and into 2024 to start investing for. And Visa and State Street fit that. State Street also has been painted a bit with this concern over banks and regional banks. The bulk of their business is quite different and we think quite stable. They actually came out today that they're participating further in sort of the custodian role that they play with the famous SPDR ETFs that are part of State Street's custodial work. So we think that there's more of a market tilt there and a lot of opportunity still in that valuation to move higher. And Visa, too, has a lot of opportunity. Maybe we consider it more of a consumer-oriented stock because it has the financial piece where it certainly benefits from transactions and rates, but then it also has the piece that's benefiting from increasing demand, from increasing employment.
Before I let you go, obviously a lot of equity talk. On the fixed income side, what's on your mind these days?
Really watching that carefully, and the truth is it's the fixed income side underpinning everything we're thinking about. We've had the latest rate hike. We see it in the very short-term rates, but bond traders are certainly showing us a yield curve in the United States that says rates are going to be lower, and everyone's just sort of holding their breath to figure out when they'll be lower, and how far out. Still some opportunities there for higher coupon bonds for investors than they've seen in well over a decade. So we still see some purchasing ability there, but not as attractive as it was probably 2 months ago, but still there.
Liz, great.